Good evening, ladies and gentlemen. This is Barry Norman on behalf of ETX, and welcome to our class on support and resistance. Now, for those of you that are joining us for the first time, ETX is a regulated provider, so therefore I'm required to give you a risk warning. Trading in the financial markets can result in the loss of the amount invested. Do not trade with funds you cannot afford to lose, and seek advice if you do not understand the risks. All information is provided in this webinar is for educational purposes only. ETX Capital and the presenter are not financial or investment advisors, and we do not recommend any securities or instruments of any kind. Any securities that are mentioned tonight are for educational purposes only. Now, for those of you joining us for the first time or joining through the web, ETX is a fast-growing financial services company based in London, and we are physically there. You're welcome to come by our offices, or most of the time when you're watching CNN or BBC or Bloomberg, you'll see them taping live in our office while they interview our account managers. We are authorized and regulated by the FCA, the Financial Conduct Authority, and we are also a member firm of the London Stock Exchange. We offer many different types of trading on our platform, and if you're not trading with us now, you should sign up right away. Or if you're trading on our binary platform and you want to go over to MT4, just contact us. You can have many different accounts and trade all the different types of platforms we offer at all times. Now, tonight's class is on support and resistance. And this is a very important concept that fits under the term of technical analysis. And despite all of its fancy and exotic tools in place, technical analysis really just studies supply and demand in the market in an attempt to determine what direction or trend will continue in the future. In other words, technical analysis attempts to understand the emotions in the marketplace by studying the market itself opposed to its individual components. And if you understand the benefits and limitations of technical analysis, it can give you a new set of tools or skills that will enable you to be a better trader. Now, if you've been joining our classes steadily, the first part of technical analysis that you need to learn was how to use and read a chart. Tonight, we're going to assume you know how to do that. And then the second part of building a roadmap to success is putting a trend line on your charts. And then lastly, we come to a very important concept called support and resistance. Support and resistance is a common jargon for areas on the chart where price has had a difficult time breaking through. Support levels tend to stop prices from falling below a specific point, and resistance levels act like a price ceiling that price cannot break above. Knowing where these levels are make it much easier to decide when to open or close trades, but how you can locate these prices to begin with. And that's what we're going to talk about tonight. Now, support and resistance can have many applications and can be identified in a multitude of ways. And there are many different indicators that will help you find different levels of support and resistance. Now, support and resistance can also be seen as the peaks and the valleys of price movement. When price is moving up, it doesn't move in a straight line. It thrusts a little, it eases back down, thrusts a little, ease back down, thrusts a little, ease back down. The resistance levels would be the top of each of the thrusts, and support levels is the price it would ease down to and then start its next thrust. Now, traders can use these support and resistance identifications for managing risk in a strategy. Traders can also use support and resistance to grade market conditions and to enter positions. And one or more difficult concepts within technical analysis is grasping the premise of support and resistance. There are numerous ways to identify these levels, and even after they've been identified, there are a plethora of ways of integrating them and trading with them. One of the best reasons to learn how to read a chart is so that you can apply technical analysis. Now, support describes the price level that an asset tried to cross below but ultimately stayed above. Resistance describes the price level that an asset tried to cross above but could not. The bare minimum requirement to draw a support line or a resistance line is that the asset must have spent a significant amount of time or volume at that price level. Specific types of support and resistance lines can be drawn on additional chart patterns. So imagine an elevator, and the asset is standing in the elevator. And as the asset is moving up, each floor that it has to break through, or as the elevator is moving through, becomes your new resistance level. So if you're standing in this elevator, and resistance would be the floor above your head, and the support would be the floor below your feet. So when the elevator is moving up, that floor is holding you up as the elevator is moving. You have to break through that ceiling to get to the next floor. Well, that is your resistance level because you got to push through it. Once you get through that ceiling and reach the next floor, what happens? That ceiling becomes your new support level, and the next ceiling becomes your resistance. It is the exact opposite when price is moving down or the elevator is coming down. When the elevator is coming down instead of going up, you have to break through the floor. So it's the easy way to understand which way you're moving for support and resistance. But the fact is, resistance becomes support and support becomes resistance as price moves through each level. So understanding the prices that are significant above and below where the current price is what's important. Not necessarily saying that there's support and resistance. Okay, you can use them. I always call support the price below and resistance the price above. I mean, it's how your brain deals with them. So imagine a ball hits the floor and then bounces. It drops after it hits the ceiling. Support and resistance is like the floor and the ceiling where price is sandwiched between them. When a stock prices fall into a level where demand at that price increases, buyers begin to buy and create the floor or the support level. When a stock price rises to a level where demand decreases and the owners begin to sell to lock in their profits, this creates the ceiling or the resistance level. So it is important to locate these on your charts. They will help you understand where price is moving, help you get entry points and exit points, and help you to see where to put your stop loss and your take profit points. Now, there are many different ways to get these. One of the most popular today is off of what we call a pivot point chart. And these pivot point charts are mathematical calculations that are recalculated constantly as price moves. And you can find these on all the technical analysis sites like it, Forex Factory, Forex Street, FX Empire, Investing.com, any place that offers you technical analysis. And they're all going to have the same numbers. Okay, these numbers are straight mathematical calculations. But the more times you'll find that once you put your support and resistance on a chart, the more times that price bounces off of support or falls back to resistance, the stronger these support and resistance levels become. It can create a self-fulfilling prophecy, and the more often it happens, the more likely it's going to happen again. Now, the more those historical patterns repeat themselves, the more traders know and the more confident they become in forecasting future behavior of stock. Like every time you hear gold at 1200, gold is going to hit 1200, gold at 1225, 1225, okay. Or somebody tells you gold's got a significant support level at 1250. What happens is it starts hitting the headlines, it starts making the news, it starts reaching out to all the traders. So what happens is 1250 then becomes an important level. Now, like I said, there are many ways to identify support and resistance, and you can have lots of them on your charts. There is no right or wrong. But understanding the concept of support and resistance, trading ranges and breakouts and breakdowns are quite valuable to all traders. Support and resistance is one of the strongest and most dependable tools available. Remember, it is the best to use any tool along with other indicators when deciding whether to take a position or when to exit the market. Support and resistance analysis is an important part of trends because it can be used to make trading decisions and identify when trend is reversing. So let's go over to a live chart and let's see about these on charts before we talk more about using them. So let me pop up a chart on your screen. Okay, now here we have the current Euro US dollar price. Okay, I'm going to flip this over to a 30-minute chart real quickly. And if you're looking at the chart, just the other day I drew, see down here, I drew these 3 support lines on down the other day, support and resistance lines, because this is where the price was trading at the time. Since then, prices moved this way and we've moved up to this new level. Now these purple lines I drew on here right before class. But as you can see on the chart, there was nothing really to use to determine support and resistance because we're looking for how price reacted in the past at the current level it's trading today. So what you do is, and this is what I call eyeballing. And eyeballing for me is one of the best case scenarios. It is looking at your chart to find common price points that the asset has shown very strong reaction to in the past. So by simply changing our charts back to a 1-hour chart, didn't find much of anything. Still, you see there's nothing where the euro is. The euro's gained a lot of momentum. It's actually the dollar's been falling. So I go back to the 2-hour chart. Again, I see nothing at the current range. You see where my lines were drawn on previous times when price was trading all the way down here. So we go back to a 3-hour chart, and now we start to see back in, this is all the way back in January, where the euro was at this price level again. Now, I simply use my eyes. I'm not using any formulas. I'm not using any indicators. I'm not using pivot points or nothing at the moment. I'm using the first best case choice for me. It's called eyeballing. And all I'm going to do is look with my eyes and try to see some points around the price that the asset is trading now that in the past had very strong action and reaction. So when I look back here at the January when it was back at this price, I can pick some tops that were very important. I can also see some, and you can have as many lines of support and resistance as you are. I see another line here, and each one of these purple lines I drew on here, I extended them forward and I saw a relationship with how this price was acting. And look at all these times that I had on the bottom purple line where I had either opens, closes, or highs touching that line. So I just extended that line forward and it gave me a basis of around where the price is currently trading. And look at this, just in the last few hours, price fell to a low right on this bottom purple line and then closed above it. Okay, we can see when I drew these lines on these tops that it had achieved back here in January. You had tops here. Here we had highs, here we had highs. We extended it forward and look at the same reaction price had at that exact price level now currently. I went up here and I saw 2 common highs and drew it forward, and look at that. That told me that price is very significant. So now I've got some support lines or resistance lines, whichever you want to describe them at, moving forward that's going to help tell me how price should be moving and acting and reacting where it is today. Okay. Now I've drawn these forward, and if I want, I can go back farther. But I find that the more recent you can find the price action and reaction to the prices, the more valid the current prices are. You know, some people go back years on charts. Personally, I don't think a chart pattern or price that was important 2 years ago has much validity in price today. But sometimes if a price is trading very, very high or very, very low, it might not have come anywhere near that price in any recent past. In this case, we were able to get something just a few months ago, and all of this helped us get some good levels on current price. So we've got our 3 lines of support and resistance up here, and I'm going to move our chart back. So let me get my marker off here. And I'm going to move it back to our 30-minute chart time frame. Now, we've extended forward, and we can see on this 30-minute time frame, now that we've changed, how important this price has been. Look at all the tops and bottoms and opens and closes that have settled on that line. Okay. We also see some significance at this line brought forward. But if you were looking at current price movement, you couldn't see anything that told you any story, because you can see on the 30-minute chart, the price has not been anywhere near this. So we need something to help us determine price. Now, what we can do is we can put another set of support and resistance on. Should have opened this up first, but let's go to investing.com. Okay, and we're going to go over here to the Euro US dollar. And we're going to go to technical analysis for the Euro US dollar. And we're going to scroll down. We're looking on a 30-minute chart, so we're going to click it over to 30 minutes. And we're going to come down here to the pivot point charts. Okay. Now, we can see that our current support levels are at 108.08 and 108.12, and it will give you 3 levels out in either direction. But for class tonight, we're only going to use support and resistance 1, the price above and below the current market value. So we can see these right on the pivot point chart right here. So that's the 108.08. So we need to write these down, 108.08 and 108.12. And we're going to go put these prices on our charts. So we're going to do this in a different color line. Let's do this in a red line. And we're going to go draw a line at 108.08. 108.08. 108.08 right there. And at 108.12. 108. Now it has to be the second resistance 2, resistance 1 is right on the same purple line that we had already drawn in. Okay, so that tells us our eyeball and the pivot point support is a very small, a very important level, which is this. Let's make this line. Let's make it dark brown. So let's pull that up. We're going to take our purple pivot point line off of there, and we're going to move this one. Sorry, we'll move our brown one back up there. Okay. So we have some very good, and what we're doing is we're trying to get as much information about price and where it's moving, because it's only giving us information at this point. It's not telling us to do anything. And what you're looking is, remember, price moves in pips, small little numbers. So when you're trading, you want to start developing or start seeing some type of price point. So we can see that this avenue between the brown and the red lines is quite important. Okay. Now, it's broken through the red resistance line or support line, and the price has fallen below that. We can expect price to then fall to our next support level. If it does, we would then expect it to bounce off of that support level. If it doesn't, we can expect it to break through. So the more levels you have and the more valid and the more current, the more current level you have, the more important it is. But the stronger that level is based on how many times that level has been touched and not broken through, or how many times it is held at that price. All we're trying to do is interpret the buyer psychology. Now, there are other ways to put our support and resistance on the charts, but this is only the first two. Okay, so we have eyeballing and pivot points. And all we're trying to do is, again, trying to tell a story about price. So let's go back and talk a little bit more from my PowerPoint about what we want to have as we get this stuff on our charts and how we can start using those to make some type of decision. So let me pop my PowerPoint back up here for you. Now, we've got our pivot points on our chart, and we've got our eyeball support and resistance. Okay. Now, most experienced traders will be able to tell you many stories of how certain price levels tend to prevent traders from pushing the price of an underlying asset in a certain direction. For example, assume that Jim was holding a position in Amazon, and he was expecting the value of the shares to increase. Let's imagine Jim notices the price fails to get above $39 several times over the past few months, even though it has gotten very close to moving above it. In this case, traders would call that level near $39 a resistance level. As you can see from the chart, which I'll flip over to you again, resistance levels are also regarded as ceilings because the price level prevents the market from reaching that point. Oh, I had my chart up here. Let me get back to the, I try to find my Amazon chart for you. Okay, I'm sorry, I lost my Amazon chart here. Okay, on the other side of the coin, we have price levels that are known as support. This terminology refers to prices on a chart that tend to act as a floor by preventing the price of an asset from being pushed downward. As you can see from the chart below, which I lost, the ability to identify a level of support can also coincide with good buying opportunities because there is generally an area where market participants see good value to push prices forward. Determining future levels of support can drastically improve the returns of short-term investing strategies because it gives traders an accurate picture of what price levels should prop up the price of a given security in the event of a correction. Conversely, foreseeing a level of resistance can be advantageous because this is a price level that could potentially harm a long position because it signifies an area where investors have a high willingness to sell a security. As mentioned above, there are several different methods to choose when looking to identify support and resistance. But regardless of the method, the interpretation remains the same. It prevents the price of an underlying asset from moving in a certain direction. So there are some basic rules, okay, for locating and putting support and resistance on your chart. Support and resistance often act as decisive trend changers. When an existing trend line meets resistance, be prepared for a dramatic shift. For example, in the Allstate chart here to the right, when the blue uptrend converged with the resistance, price bounced off of it and moved lower and wasn't able to bounce back up and break it, so it ended that uptrend and the asset moved into a downtrend. So longer term trend lines will help you see this more so than short-term trend lines and short-term support and resistance. Okay. If support is violated, okay, that same level will act as a future resistance level. In other words, when price is moving down, like we see in this chart here, just trying to get my marker on here. price is moving down. You actually see a strategic bottom at this point. Price broke through it, moved back up and broke above it, and then fell back down. Okay. This was acting as a support level at this point. Then when price moved back up and hit that and bounced off of it, that same price level is now the resistance level. But that price at 1750 was critically important, whether it was a support line coming down or a resistance line when the price was moving up. Okay, because it just reverses its position or its name. And that's why I told you a lot of times calling it a support or resistance, all I know is I call them support and resistance lines. They're strategically important prices. Now, rule number 3 is to verify support and resistance. The more often a trend line is tested, the more valid it becomes. This let me get my markers off here. This chart the chart shows persistent resistance at 3250. So we can see each time the price came down or up and came through this 3250, it bounced off of it and came back down. Here it came up, touched it, bounced back down, came down, came back up to it. So we have 4 times that this 3250 became a critical price. Okay, once you have, the more times you come with it, the more important it is. With 4 separate challenges at this level over a 4-month period, we should expect all future rallies to stall at this price. Rule number 4 is to verify support and resistance. And this is how you know you have the right levels. If a resistance to support level is associated with increasing volume, the trend becomes more valid. Since September 2008, 4250 served as a resistance line for this asset. Each time that that price level is tested, volume increases. You can see volume on the bottom of the charts here in the blue. This pattern adds weight to the 4250 level because it indicates that overcoming that price point will take a significant time. Because every time, if you can see that price is moving up to touch that support or resistance line and volume's increasing with it, okay, that's telling you that traders have more belief that the asset is going to respect that resistance line. Okay, rule number 5, time matters. The more recently a level has been established, the more useful it is, like I was showing you when we drew them on the charts. A problem with the current bear market in this asset is that quick losses had many traders looking well into the past for support levels. Unfortunately, grasping distant past is not useful. Examining a 3-year graph, we see valid support at 520. By the time the stocks were collapsing in the fall of 2008, that support level had not been tested in over a year. This made the support less important. The farther you have to go back to find these lines, the less valid they are, unless those lines moving forward have been supported by current price action. But like I said, a lot of times when markets are either very high or very low, you don't have anything but to go back into the past. Support and resistance levels are key mile markers in a stock or an asset's progress. Whenever you're developing trading strategies, consider these points on a graph. Doing so will help set profit targets and prevent frustration when eventual reversals occur. Another great way to find support and resistance levels is to mark levels in the past where price had a difficult time breaking through. As price moves up and down each level that price has bounced off of could be a level in the future that prices bounce off of again. This is a manually intensive method and takes time to draw on all the currency pairs that we trade, but can pay off in the long run. This is what I define as eyeballing. Locating the swing highs and the swing lows. Okay. All you do is you look for, on your chart, you look for the tops and the bottoms of trends. And then you can extend the prices forward. So this is another sort of eyeballing. So you have the eyeballing I showed you the first time. You have support and resistance from pivot points. You also get support and resistance from trend lines. When price is moving up, the trend line becomes a support line holding the price above. When price is moving down, it is a resistance line. And therefore, that's why you draw trend lines above and below the prices. And they give you a support level. So let's go back over to live charts and let's try to draw this eyeballing too with the support highs and lows. And also let's see if we can get a trend line on the chart. So we have 4 different support and resistance methods on those charts. Okay. Now, if we wanted to draw a trend line, again, if you don't know exactly the rules for trend lines, you need to come to our class to Trend is Your Friend. But we could look at it. It won't work that level because it would have been broken. So this is our swing low. We've extended through that swing low and forward. So let's actually put a legitimate trend line on the chart, not just my scribble. Remember, a trend line cannot have been violated. And we actually don't have an active trend line right now, or valid trend line, because we only have 2 points in common. We can draw the line with 2 and express it out in the forward, but until it has a third point in common, it's not a valid trend line. So let me get my scribble off of here. But what happens is this area above the trend line is a support level. The trend line is actually supposed to support the prices above it. So you have support and resistance from these lines, and if we were to extend this trend line out in the future, it would give us those. We could take a short-term uptrend line from this location, this swing low, I'm just going to get my marker off here. And actually, this gives us a valid uptrend, a valid trend line, because we have 3 points in common, and we can then project it forward, and we have a very good short-term uptrend right here, and it's meeting with our support and resistance level, and look at how accurate it is supporting that price. Here and now the current price is touching right that. We have it right on our resistance levels, and now we can expect price either to bounce off that trend line and move up to the brown resistance level, or to break through, violate that trend, end that trend, and come back down to the purple level. So we're only trying to figure out where it's going to go. When we get some clue, we could then use that to make some trading decisions, as well as determining where we would put our stop loss and our take profit points. So we actually have 3 sets of trend lines, support and resistance lines. Now, we could go and take our swing lows and our swing highs, which actually, with our eyeballing, we kind of duplicate that because we have our swing highs here, we have our swing lows there, which are our purple lines, and we happen to do that. Again, because we had to go way back into the past to get those, we can't see any more swing lows in common and swing highs in common. But you see how we've connected all the swing highs here and the swing lows here. And that gave us our purple line. And they happen to tie back to those swing highs and swing lows back in 3 months ago. Now, support and resistance doesn't have to be confusing. You can mix and match any of the methods above and create a healthy amount of price levels that we can trade. As always, practice makes them perfect. So I'd like to thank you very much for joining us tonight. I hope you learned a little bit about support and resistance, because if you came to our class the other day in Gann fans, or you come to our class next month in Fibonacci levels, you'll see other ways of putting support and resistance levels on there. But these are the beginnings of building your roadmap on a chart. Your chart, your support and resistance level, and your trend line become the critical pieces of your roadmap. Then you can start building trading strategy around them. But these are not the trading strategies. These are parts of helping you to incorporate into a trading strategy and helping determine what prices are important. So you're slowly building your pieces and then starting adding your technical indicators and starting to get more understanding of a personality or the price movement of an asset. So once again, thank you for joining us tonight. We'll see you again next week. And remember, start out with what is technical analysis. Then come to our class, Basic Charts and Graphs. Then come to our class, The Trend is Your Friend, and then Support and Resistance. And then after that, our class on building your trading strategy. And we'll start moving over to indicators and oscillators while you slowly put together your methodology, your own trading plan. And actually next month, we're going to actually be launching, the month after next, a new class on building your own trading plan, and then incorporating this into risk management strategies and money management strategies. So thank you very much. Have a great day, and thank you for being part of the ETX family. Good night now.